that you need to do again. And when we finish that one, we're moving on. We'll be then finished with the introduction to accounting. Then we're going to move on to section 86, trust investment. So if you can do that one, I'm not going to give you too much time. I'm going to give you, say, 15 minutes. So if you can go for it as fast as you can. Thank you. Liam, have you got full sight of everything?
Yes, I do. Thank you.
Good stuff. Thanks. Are we going? Okay, can I do this question, please?
Yes. Yes, sir.
Okay, thank you very much. Okay. Your client, Marcus, instructs you to collect. Sorry. Can you see the screen? Everybody see the screen? Clear?
Yes.
Yes.
Okay, lovely. Okay, what do we have to do? Record the above mentioned transactions in your accounting records. Transfer whatever you are entitled to transfer to your business account. Account fully to your client, but retain the deposit to cover future fees and disbursements. Retain the deposit. Okay? Prepare an accounting statement and make provision for VAT on your fees of 15%. So the instruction that we've got from our client is, listen, I'm going to give you a deposit, but you must keep that when you account to me. So Marcus instructs you to collect 5,000 from Thomas. Now, that instruction to collect the 5,000, is there a transaction there? No, it's purely an instruction. We can't charge, there's no entry to be recorded, it's an instruction. And then he gives you a covering deposit of 1,000 rands in cash. Is there a transaction there? Yes, there certainly is a transaction there. Is it trust or business? It is trust. Does money go through the trust bank account? Yes. Cash book, money in. So we are going to debit the trust cash book with 1,000, and we're going to credit Marcus in the matter of Thomas with 1,000. Now you instruct and pay a tracing agent 250. Have we got a transaction? Yes. Trust or business? Well, I've got 1,000 rands in trust, so I'm going to use the trust money. So it's definitely trust. Does money go through the trust bank account? Yes, because I've paid. Did it go in or out? It went out, so I'm going to credit the trust cash book with the 250. And on whose behalf did I pay the tracing agent? On behalf of Marcus, because he wants me to find Thomas. So Marcus, you've got to pay the 250. So I deducted off the 1,000 that he gave me. I now charge a letter of demand and summons fees a few days later. You know, once the tracing agent, must be a couple of weeks later, when the tracing agent has finally found Thomas, tells me this is where he is, and now I prepare a letter of demand and a summons. I make out an invoice. Who do I make out the invoice to? Marcus in the matter of Thomas. Letter of demand and summons fee 300 plus VAT at 15%, 345. Have I got a transaction? Yes. Is it trust or business? It is business. Has 345 gone through my bank account? No. So it's got to go in the business journal. So in the business journal, who do I have to debit? I've got to debit Marcus versus in the matter of Thomas, credit fees and credit output VAT, and I show my narration. Now I post that from the business journal, I post it into the business ledger. So I'm going to debit Marcus versus Thomas with the 345. I'm going to open up a fees account and credit the fees with the 300. And then the output VAT I'm going to open. And I'm going to credit that with the 45 rand. Now Thomas pays an amount. We found Thomas, we've summoned him, and he comes in and he pays the 2,000. When he pays me the 2,000, have I got a transaction? For sure. Is it trust or business? Well, I can't put it into business. It's not my money. I put it into trust. I bank it into the trust banking account. When I write up, remember the cash book is written up after we first bank the money into the trust bank. And maybe a week later, I write up these books. When I look at my trust bank statement, I see, oh, here's money gone in. So I write it up, or if I write it up from the deposit books, I write it up. And money go into the trust banking account. Yes, I debit the trust cash book. And then on whose behalf did I receive that money? From Thomas, on behalf of Marcus. So I must show that I owe it to Marcus, the 2,000 Rand. Now, because I've collected 2,000, I charge a collection fee. I make out an invoice. Marcus versus Thompson, put on my VAT number. Fees rendered, collection commission of 200 of 10% on 2,200 plus VAT at 15%, 30 Rand. You owe me 230. That represents an invoice and it represents a transaction. Where must it go through? It is a transaction. It is a business. Money hasn't gone through the bank, so it's going to go through into the business journal. Debit Marcus versus Thompson. Now I post it to the ledger. Debit Marcus versus Thompson, 230. Credit the fees, 200. And credit output VAT with 30. Now I must transfer what I'm entitled to transfer. I add up over here, Marcus versus Thompson. How much does he owe me? He owes me 575. How much have I got in trust for Marcus? I've got 3,000. I've got 2,750. Can I do a transfer? Of course I can do a transfer of how much? The lesser of the two balances, which is the 575. How do I do a transfer? What book do I pick up? The transfer journal. So I'm going to debit Marcus versus Thompson with 575 in trust and credit him in business. Let's post it, Marcus versus in trust. 575, we debit the 575, we post it to his trust ledger, and we post it also to the business ledger, the 575, the first wing. And the second wing, of course, is to make the EFT from the trust bank account into the business bank account, and then to come and record it in the cash book. Remember that bookkeeping is historical. We first enter into the transactions. We do the transfers, we charge the invoices, then we come back maybe a week or two later and we write up these books. Okay, then we don't do the book first and then the transactions. Bookkeeping is historical. It's recording the transactions that have been entered into. So we've done this EFT and now we're recording it. The money is being paid out of the trust and it's paid into the business. So that 575 that we got in is represented by the 500 Rand fees and the 75 Rand VAT. This question didn't tell us that we paid SARS, so we don't have to pay SARS. Now, the last thing I've got to do is I've got to account to Thomas, Marcus, should I say. In business, there's nothing to be done, but now I need to account to him. On this side, there's 3,000, and on this side, we've got 825. So that leaves us with 2,175, correct? That we owe Marcus. I should in normal circumstances, I would pay him 2,175. But what did he tell me? He says, retain that deposit. Keep that 1,000 that I gave you. Keep 1,000 there. So I'm not going to pay him 2,175. I'm only going to pay him 1,175. How do I pay him? I go into my banking app or whatever you call the thing on my computer and I make a payment to him of 1,175. Then I come and write up the books. And in the books, did money go through the bank? Yes, it went out. So I credit the cash book with 1,175 and I debit Marcus with 1,175. Now, if I add this lot up here, it adds up to 2,000 and 3,000. So what's the balance on his account? I write it in here, 1,000. And then to check my calculations, I write that balance over here, 1,000, and then I add these up and I see it comes to 3,000. So that's perfectly correct. Exactly the same here. I add up the 3,000. I subtract, that adds up to 2, as we can see at the bottom of the screen. So the balance that I've got in the trust is 1,000. and I write it in over here, and I balance it out. Now I must do the statement. What was the first thing that we received from Marcus? If we go and look, the first thing we received was this R1,000. So we show the 1,000. What's the second thing that we did is I think it was, we paid the tracing agent. That's right, we paid the tracing agent. This doesn't have to be done chronologically. It can be done in any order. It doesn't matter what order. You can just copy. And in fact, the statement is just copying what is in the ledger accounts, the two ledger accounts, just copying it. The next thing that we did was we charged the letter of demand and the summons fee, 345, and we can see it there. What was the next thing that happened was we received the payment from Thomas, the 2,000. The next thing that we did is we charged this collection commission of 230. We charged the collection commission of 230. The next thing that we did is that we paid Marcus 1175. So we paid him 1175. We did an EFT to his account. And now there is still a balance left over here. If I work out over here, this adds up to 3,000. And this adds up to 2,000. So therefore, there still is a balance of 1,000 Rand, which I now bring down and I send him. When I make that payment of EFT to his account, I then send him, I also scan and I send him the statement, and he can see, oh, what has exactly happened. I've collected 2, I've received 1175, but my attorney is still sitting with 1,000 Rand in mind there. Any questions?
Mr. De Kok?
Yes.
So the statement is mainly made up out of the bank, the trust account of Marcus and the business account of Marcus.
100% right. It is that account, which is the business account, right?
Yes.
If you look, are you looking at the screen? You see it?
Yes.
It's made up of this and that.
Okay.
But what I don't bring into the statement is that 575 debit and that 575 credit.
Because it's internal.
It's internal, and one cancels the other one out. If I put that 575 over here, he's going to wonder, what are these two 575s, and phone me and waste my time.
Yeah.
Which I could be using to charge clients and get my work done.
Okay, thank you.
Okay, pleasure. Any other questions? That brings us to the end of the introduction to accounting. How are you feeling about it? Do you feel that you know a little bit more than you knew yesterday morning?
Yes.
Okay. Tell me, how many of you are writing the exam? When are you writing?
August is, I think, the 17th or 18th. I'm not sure.
Okay, the 17th. And
it's not much time. Yeah, one of those 2 dates.
Okay, so you'll be writing the 17th or the 18th. Okay, well, that's good.
The 18th. Yeah,
the 18th. Okay, well, you still got quite a long time to go. It's more than a month. So there's quite a lot of time to carry on studying and follow up wherever you're falling short. Anyway, that brings us to the end, and now we're going to move on to section 86. Let's just go have a look at what this is all about. I'm just going to get rid of that. Dave, and I'm also going to just get rid of this one. Yeah, I'm not going to keep this. Don't save. So we've got the legal and the flow chart for the transaction I'm going to keep, but now I want to open something else up over here. Browse. Okay, I'm going to open that. Okay, all right. Let us just go back to the Legal Practitioners Act here. That handout that I gave you, which I've got here on the board here as well. Now, yesterday, we dealt with this part here. You remember? The powers and function of the board. Can I continue? Are you all ready for it? Yeah, if you and if you can get out the Legal Practitioners Act handout that I've got you can either look at it on the screen here, but you have got it in front of you in case you wanted to make notes or underline something there. The Legal Practitioners Fidelity Fund, the powers and function, this was the arrangement with the bank. Okay, the arrangement that the board makes with the various banks. So you can only open your banking account with certain banks, and those are laid down by the board. And we saw there afterwards that if the arrangement with the bank is cancelled, you have to also withdraw all your money out of that particular bank and transfer it to another bank which is acceptable to the board. Now, chapter 7, and we did this yesterday. 86.1, every legal practitioner referred to only 4 must operate a trust account. Every trust account practice must keep a trust account at a bank with which the fund has made an arrangement and must deposit therein as soon as possible after receipt money held by such practice on behalf of any person. So let's go have a look at what does this look like. Here you've got a trust, and here you've got a trust bank account, okay, in terms of 86.2, which is the one that we've just read. Now all your clients come, okay, all your various clients come, and I'll just call it various, and they've got 700,000. They give you 700,000. What do you have to do? In terms of section 86.2, you've got to put it into the bank account. Okay, let's go look at that again. It says there, every trust account must keep a trust account at the bank and must deposit therein money held by such practice on behalf of any person. So that is what we've done here. We've received this money on behalf of these clients and we've put it into here. Now what does it say? Then it says, paragraph 86.3, a trust account practice, which is a legal practitioner, may, of its own accord, very important words here, invest in a separate trust savings account or other interest-bearing account any money which is not immediately required for any particular purpose. What the devil does that mean? Let's try and understand that. Let's go have a look at this here. Now, you've received 700,000 from various clients. Why did you receive this 700,000? Because you're doing work for a whole whack of clients, and each of them comes and says, listen, will you handle my divorce? And you say, okay, you must give me 10,000. Somebody says, can you do a third party? You tell him you must give me 30,000. The next one wants a lease agreement. But I mean, it's not just you. You might have a couple of partners. You receive 700,000. But this 700,000 is going to be used for what purposes? It's going to be used for disbursements on behalf of those clients. And it's going to be used to cover your fees on behalf of those clients. Now, you know, and I know, that you can't do all of this work at the same time. And at no point in time will you be able to transfer that full 700,000 out, because it won't all be owed to you because you haven't finished the work. But as you finish that work, new money will be coming in from maybe the same clients or new clients. New money will be coming in all the time. So you can say to yourself, you know, I don't actually need 700,000 because it's earning no interest in this current account. If I take it out of this current account, I can earn interest. And that interest will accrue to the Fidelity Fund, but then I get benefits from the Fidelity Fund. What are the benefits that I get from the Fidelity Fund? Is my trust bank charges I can claim back from the Fidelity Fund. Also, my trust books have to be examined by an auditor. And the fee that that auditor charges me, I also can claim back from the Fidelity Fund. Plus, what does the Fidelity Fund do for me? It provides a belt and braces to the clients here who give me this money. Because if I steal this money, or if my staff somehow manage to steal the 700,000, these clients have recourse to the Fidelity Fund. and they will pay my clients out. And that's the only reason why these clients are prepared to give me the money. If I didn't have a fidelity fund as a legal practitioner, if there wasn't a fidelity fund, I wouldn't have clients giving me money. They wouldn't prepare because they wouldn't trust me. They wouldn't know me from a bar of soap. They know that I'm a legal practitioner, but that doesn't make me an honest man. So I wouldn't receive the money and I wouldn't be able to run a decent practice. I wouldn't be able to survive. So therefore, I want the fidelity fund to be strong. So I want to earn interest for them so that they can provide that. How do they provide that belt and braces? Is they actually take out an insurance. They form their own insurance company and they insure those monies that are held in trust by me against theft by delinquent attorneys and delinquent attorney staff. Okay, so over here, I've got the 700,000 that's come in. So and what was the other word that says here? A trust practice may of its own accord. So therefore, what do I do here? I've said to myself, listen, I don't need the 700,000 in an account which is earning no interest. I can actually take out as much as 500,000. That isn't a fixed figure. That is a figure that is of its own accord. You as a practicing attorney will be the one who decide how much money do you need in your trust to pay out over the next week or two. And also remember, as you're paying out, new money is coming in. So you will apply your mind and decide. So here in this particular case, I'm just saying, I'm using a figure. I'm saying I can invest 500,000. So I take the money out here and I invest it. What may I invest it in? Again, you may invest it in a separate trust, savings account, or other interest-bearing account. So you are very limited. You can't go put it in anything risky, okay? It can only be in an interest-bearing or savings account. Obviously, it can't be risky because if you put it into shares on the share market and it crashes, suddenly you haven't got the money in trust. What is your clients going to say? So therefore, it has to be in a savings account or other interest-bearing account, and that is also going to be with one of the banks that are party to the arrangement. So if we go back to over here, we take the file now. In whose name will you make out this investment? This bank account is in your practicer's name. The money goes in. When you invest this, you again invest it in the name of your practice. But the account has got to contain a reference to this section. In other words, it would be, if it was me, it would be De Kock Attorneys, Trust Investment in terms of section 86.3. That is what the name of the particular account would be. Why does it have to contain a reference to this 86.3? Because if I just made this 500,000 rands investment in the name of De Kock Attorneys, I could walk around and say, listen, I've got an investment of 500,000. Can I use it as collateral for a loan? And I could commit fraud like that. But as soon as any lender sees that it's a section 86.3 trust investment, they won't use it as collateral for any loan to lend me money or advance me any money, because they're going to tell me, but that's not your money, that's trust money. Now, the interest that we earn on this 500,000, it all goes to the legal practitioner's fidelity fund. 100% of the interest goes to the legal practitioner's fidelity fund. Is that all clear to everybody? Are there any questions at this point?
No.
You okay? Anybody else? It's all fairly straightforward? Okay. Then let's move on. We've done section 86.3. 86.4. A trust account practice may, now look at this, on the instructions of any person. Over here, it was of its own accord. Here it says, so here the trust account decided here. Over here, the trust account doesn't decide, the trust account practice doesn't decide. they receive instructions of a person. It may open a separate trust savings account or other interest-bearing account, which is exactly the same as over here, for the purpose of investing there in any money deposited in the trust account of that practice on behalf of such person, over which the practice exercises exclusive control as a trustee, agent, or stakeholder, or in any other fiduciary capacity. So let's go have a look at this. Now Jacob comes to you, and he comes and he gives you 300,000, which is a deposit on the property that he's going to buy. What does it say? What did it say over again? If we go to 86.2, must deposit any money held by such practice on behalf of a person. So when Jacob gives us this money, when he gives us some money, it's got to go into our 86.2 account. But now Jacob has also given me an instruction. Invest that money for my benefit, because it's going to take you 2 or 3 months to do the transfer of this property. And I'm going to lose the interest on this 300,000, so I want you to invest it for me. And the section 86.4 allows you to make this investment. So you now take this 300,000 of Jacob's and you invest it in a section 86.4. Who may you invest it with? One of the banks of the arrangement. Into what? Again, that savings account or an interest-bearing account. In whose name do you invest it? Again, in the name of your practice. The Cock Attorneys, section 86.4, trust investment, but now you also include Jacob's name in the name of the account. When you go to the bank, that's the name that you're going to open it up in. Again, the reason to avoid fraud and also for identification that it is actually Jacob's money. Now, the interest that is earned on this 86.4, 5% of the interest goes to the LPFF, and Jacob gets 95%. Prior to the Legal Practice Act of 2014 here, the one that we are looking at, 100% used to go to Jacob. Then, as from the 1st of March, I think 2019, the LPFF said, no, wait a minute, we are still carrying the risk of this 300,000. If this gets stolen by Jacob, not by Jacob, by the attorney or his staff, we are still insuring it and we're covering it. Sorry, no. On this interest, 5% must now accrue to us. Jacob has got to give us 5% of that interest. And that's been accepted, and this is the way it's going to be. Now, when you withdraw these investments, okay, when you withdraw these investments, the monies have got to go back into the trust account here. Let's just have a look. Where does it say that again? Transfer from trust 54.14.7 on page 7. Page 7. I'm just going to go to page 7 here. Are you all still awake or fast asleep?
We're awake.
Ah, lovely.
Awake.
Okay. Are you enjoying this?
Yeah.
Yeah, like you enjoy a sore thumb. Okay. All right, yeah, let's just have a look here. Transfers from trust investment account. Okay, so in other words, those 2 investments that you made, now transfers, unless the firm has received written authorization for the payment of any guarantees issued by a bank on the strength of a trust investment, any amount withdrawn by the firm from a trust investment account is deposited promptly by the firm in its trust banking account. Okay, so in other words, what are they saying? When we withdraw any of these investments, the money has got to go back into the section 86.2 account. The reason for that is because if I didn't do it that way, let's just I go down with Jacob and I go down to the bank and I say, listen, with this investment, when we withdraw it, I say to the bank, listen, you can see this investment is Jacob's investment, pay it straight to him, then I wouldn't have any kind of audit trail in my books. I'd have to now pass journal entries. And journal entries are very dangerous things. It's a method that most fraud is committed. A lot of fraud is committed and a lot of wrong things are hidden by people just passing journal entries. That's why any journal entry that your bookkeeper ever passes in your books, that's one of the books you always call for. I want to see the journals. And you have a look at those journals and see why, what was the transactions behind that journal? Because if that bookkeeper has made mistakes and paid out incorrectly, for example, like we had this morning where we had, I showed Zolani and Peter was his name, where we paid 5,000 out on behalf of Peter when we only had 4. If your bookkeeper realizes, and it was the bookkeeper's responsibility to advise you that there was only 4, but the bookkeeper didn't do the work properly or the books weren't properly up to date and allowed you to pay out 5, what could the bookkeeper do? He passes a journal entry and he moves money from Zolani to Peter to hide away that debit balance, which is fraudulent again. And that is why you as the practitioner, you would always say, listen, I want to see a listing of all the journals that you ever pass. And they must be proper authorization. No journal can just be passed willy-nilly by any bookkeeper. It must be authorized by you as the legal practitioner. Extremely important. Okay. So have you, now let's just go back to section 86.4 again. Okay, we've got up to here, 86. Now, 86.4, this is the 84. Now we go to 5. Interest accrued on money deposit in terms of the section must, in the case of money, in terms of section 2, that is your current account, and this one that you did of your own accord, right? That interest must be paid over to the fund, must be paid over to the fund and vests in the fund, which is what we said over here, 100% of the interest belongs to the fund. Any interest earned on this also belongs 100% to the fund. Okay? Then it also says, and subsection 4, interest on subsection 4, which is the one on the instructions of any person. That one here, that must be paid over to the person referred to in the subsection, then colon, provided that 5% of the interest accrued on the money in terms of this paragraph must be paid over to the fund and vests in the fund. That is where I get this from, the 95 and the 5. Okay, that's where I get that from. It comes directly from here. Then again, it goes on 6. A legal practitioner may not deposit money in terms of subsection 2, nor invest in terms of subsection 3 and 4 in accounts held at a bank, which is not a party to an arrangement as provided for. Remember that arrangement that we spoke about this morning that the board has got with these various banks? If the bank is not a party to that arrangement, then the legal practitioner may not put his money in there or make any investments with that bank unless the prior written consent of the fund has been obtained. And I don't think you would get that prior written consent easily. Yes?
Excuse me, is that the authority to invest form they must complete, the client?
Sorry, just I missed that there. Please say it again.
Is it the authority to invest that the client must complete these days for you to
This is number 4. That is this, the authority to invest is this here.
Yeah, is that what they need to complete, the authority to invest in writing for you to invest their money in an interest-bearing account?
That's right. You've seen that at your office, eh?
Yes, conveyancing more. But yes.
There you go. That's because that is, and it's in conveyancing because he gives you the deposit and he gives you the authority to invest. Okay, and that's what it is. Over here, you don't need any authority because it's of your own accord. But here in the conveyancing, when he gives you that big deposit like Jacob gave us over here, you will get an authority in writing. You have it in writing for you to invest that 300,000 with the bank. And I'm almost sure your authority will actually also stipulate, the one that you got at your office, does it stipulate the name of the bank that you may invest it? He gives you authority to invest it with Nedbank or whatever. Can you remember if your one gives the name of the bank?
It's either Absa or Standard Bank, depending on which gives the best interest.
Okay, but that's it. But the reason why I'm asking that is because let us assume Jacob gives you the 300,000 and gives you authority to invest it, but it doesn't say which bank. So you invest it with one of the banks that party to the arrangement, but let's say that bank goes belly up. Then Jacob's going to come to you and he's going to say to you, but listen, you put it in a bank that went belly up, that went insolvent. Now I'm claiming from you. But if you've got a written instruction from him that says, listen, I'm instructing you to invest it with Standard Bank or that bank, whichever gives you the best rate of interest, then he can't come to you if the bank goes belly up. Because you're going to say, but look, you told me, yeah, in writing, you told me invest it with that bank or that bank. I've done it. I've acted within your instructions. So if the bank goes belly up, Mr. Jacobs, that's your problem. You with me? And if the bank goes belly up, it's not theft. The Fidelity Fund is not going to stand in for anything like that. But that is why the Fidelity Fund, the board, has now made an arrangement. They want to be careful that legal practitioners aren't investing in banks that could be a little bit dicky. Not that there would be too many, because, you know, there is the Banking Act that covers these things. Did that answer your question?
Yes, thank you.
Okay, thank you. And then a legal practitioner referred to must comply with the terms of arrangement completed between a bank and the fund as provided for. Okay, you get the gist of it. Let us now go have a look at the practical implementation of this. I want you to go to question C1 in your handout. We're skipping B because B is bank reconciliations. So in your handout, I want you to go to question C1, which says at the top, section 86 investments. Are you there?
Yes.
Okay, may I continue? Is everybody there? Everybody with me? I sincerely hope so.
Yes.
Yes, somebody got shot there. Okay, let's have a look. You are holding 463,418 in your trust banking account. Therefore, my trust cash book, right, must show that I've got a figure of 463,418. Is that correct? Well, I think I've got it here. I'm not sure. Yeah. We've got 463,418. It says you are holding 463,418 in your trust banking account. What do we have to do? Record the appropriate transactions in your trust cash book and ledger accounts. So now we are holding 463, which includes 150 on behalf of your client, Henry. So Henry must have a balance of 150 here. He's got 150. Okay. That means, if we look further, there's nothing. We must have other people's money. So we open what we call here a collective account for other clients. Okay. Open a collective account. And if I take 463 less 150, because we read that the total of the list of your clients' trust credited balances must equal the total of the trust money that you're holding. So therefore, the others here must have a balance of 313,418, which is calculated by 463,418 less 150 gives me 313,418. Okay? So this is the layout that we've got. Now, you have Henry's written consent to invest the amount on his behalf with African Bank. So we are now going to invest Henry's 150, because at the moment we're not earning any interest on this. He's got 150, he wants to earn interest on it, and he tells you, a written instruction, invest that for me. How do we invest it? We go down to the bank and we firstly go, and that bank must be part of the arrangement, and we open an account. Or we can do it online, whichever way we do it. We open in an account with that bank that is party to the arrangement. And what is the name of the account going to be? It's going to be my legal practices name, the Cock Attorneys, Section 86, for investment Henry. That's the name of the account. Once I've opened that account, when I get back to my office, I go into the cash book, into the bank, into my computer on the bank. I open up and I do a transfer of 150 from my current account into that investment that I've just opened. Okay? Now I must record it in my books. So 150,000 has gone out to African Bank, and then I open an account called an investment in terms of Section 86.4 dash for Henry, and I debit the 150,000 there. Does that make sense to all of you?
Yes.
And I'm not going too quickly?
Yes, it does.
Okay. Then
Oh.
Then it says, you decide, and you decide, You decide, and your decision ties in with this of its own accord. You decide, and that is definitely Section 86.3, because you are now deciding. So you decide, where am I here? To invest 200,000 in an ABC Bank interest-bearing account. Obviously, African Bank and ABC Bank must be part of the arrangement with the board. So now, exactly the same thing. I now go to ABC Bank and I tell them I want to invest money with you. Now, you might be saying, but why do you put it with African Bank and ABC Bank? Well, if I'm a conveyancer and I want to get onto the panels of these various banks, if I don't have any accounts with them, what is the chance of getting onto their panels? I open accounts with these banks in the hope that I can get onto the bond panels or the transfer panels so that I can pick up work from them. So that's why we would invest it possibly in separate. So now, again, I open an account with ABC Bank. What is it going to be? The Cock Attorneys investment in terms of Section 86.3. Because this I'm doing of my own accord, and it's going to have no reference to any person. Now I get back to the office, go into my computer, and I do the EFT out of my current trust account into that investment that I've just opened. And so over here, it's going to be ABC Bank 200. Then I open an investment in terms of Section 86.3, and I debit the 200,000 there. Okay. If at this point in time, it was my month end. And you remember, I explained to you about an hour or two ago about that list of balances that you got to extract monthly, which we saw on paragraph 5414 on page 8, that every month you've got to extract your list of balances. Your list of balances would be 150 plus 313. So the total trust money that you're holding would be 463. But how would you be holding it? 150 would be the investment in terms of 86.4, 200 86.3, and left in here would only be 113,418. 150 plus 200 plus the 113,418, that would give me the 463,418, which I owe. That would be reconciling my trust position at that point in time. Now, we now withdraw this investment. This 150, I withdraw it, and I withdraw this 200. When I withdraw this investment, it says here, you later withdraw the investment funds and redeposit amounts of 152,000 and 205 respectively into your trust banking account. So we deposit 152,000. When we deposit it, it goes into our trust banking account. So when we write out the trust cash book, we debit the trust cash book. Now that 152 is made up of two elements. It is made up of the 150 that I invested initially, plus 2,000 rands of interest. Okay, so that 100, now just as we did with input VAT, we split post. I'm split posting this. 150, I'm bringing, because I no longer have this investment. But the 2,000, that gets split. Now you won't have this in the exam. I'm just showing you this for illustrative purposes. That Henry, of the 2,000, he gets 95% of the 2,000, which is 1,900. So he's going to get the interest of 1,900. I want to just bring it down a little bit there. That looks a bit better. And the 100 Rand belongs to the Fidelity Fund. Now I open an account for the Fidelity Fund, and I keep a separate account called the Fidelity Fund in terms of section 86.4, and the 100 Rand goes there. So in other words, this 152 has been posted 1,900 there to Henry, 150 to the investment, and 100 to this Fidelity Fund interest in terms of section 86.4. When I withdraw this 200, I get 205. Again, I have to bank it, and then I record it in my cash book, the 205. That is again also made up of two elements: interest of 5,000 and the investment of 200. So the investment that has come back, I no longer have this investment, so I'm going to credit the investment with the 200, but the 5,000, all of that interest accrues to the Fidelity Fund. Now I open a separate account called the Fidelity Fund interest in terms of section 86.3, and I credit the 5,000 there. Now you might ask me, but look, you're paying the Fidelity Fund, why open two accounts here? The reason again is for administrative efficiency. At the end of the year, I, as a legal practitioner, in application for my Fidelity Fund, I've got to complete what they call the attorney statement. And that statement requires me to reconcile all of the interest that I have received on an 86.2 account, on an 86.3 account, an 86.4 account, and it's all going to be done separately. There are columns where I'm going to show what did I bring forward from the previous year, what did I earn this year, what did I pay to the Fidelity Fund, and what am I carrying forward at the end of this year. But it's got to be done 86.3, 86.4. Now, if I put all the Fidelity Fund interest in one lump sum account, then I've got to take that whole account, and for the whole year, I've got to go prepare an Excel spreadsheet and divide it up to see what is what. So by keeping separate accounts here, it makes me administratively very efficient, and it'll take me minimum amount of time. So I'm not wasting time doing things that could be done just by opening the proper accounts. Okay. Then the question says, you pay the beneficiaries the interest. So who do we owe interest to? Well, firstly, we owe Henry interest. So we pay him his interest. I do an EFT to Henry. Now I come and write up my books. Did money go in or out the bank account? It went out. So I credit the trust cash book and I debit Henry. And then what balance is left for Henry? No, man. What balance do I have for Henry? I will still be holding the 150,000 of Henry's money. Then I also pay the Fidelity Fund, and I can make one payment for the two amounts. I pay 5,000 because I owe them 5 and 100, and now I pay, and I split post that payment to them as well. Okay, and that's the sum of it. Is that all right with you? And then, of course, in the trust banking account, we'll have to see what is in the bank account here. We're now back to having the 463,418, which is made up of the 313 plus the 150. Ray, Saul, you okay?
Yes,
Are you
yes,
there?
Yes.
Good. And you happy with it? You understand it?
Yeah.
Okay.
Will it be
Gaddafi?
in the exams?
I beg your pardon?
Will it be in the exams?
Yeah. Well, you hope it's in the exams because they're nice questions and they're easy to do.
Okay.
So you sincerely hope. But look, I just bear in mind, I told you yesterday, I'm an accountant. So I don't know what's in the exam and I'm not allowed to know because I'm not allowed to be on the panel at all because I'm not an attorney. So I've got no clue what goes into the exam.
Okay, so I didn't ask you for guidance as to what questions to ask.
No, you're wasting your time. And if I was on the panel, you'd still be wasting your time. I have got certain ethics. Okay. Could I ask you to go and do question C2, please? I'm going to leave this here so you can see it, the solution over here, and you can see how it's done. And you've got the numbers 1 and 2 and 2. Now I need you to go apply this to question C2. Are you in a position to do it? You good enough to do it? Carlin?
We can try.
Good stuff. Go for it.
Yes, sir. Thank you.
Okay, I'm going to give you what's now 3:23. I want to definitely finish it off by 4 o'clock today. So I'm going to give you about 20 minutes and I'll do it with you. Okay. Give it your best. I'm just going to escape for 5 minutes in case any of you have got any questions, but I'll come back and have a look again, all right? Just maybe type a message and then I can see when I come back.
Okay.
I won't be gone for... Yes? You got a question?
No, I said it's fine.
Ah, thank you. Bye. Oh, God.
Practice is starting to take
Yeah.
Justine was in macro. And the guy came up to and said, listen, I think you must get out of here. Apparently it's a big guy and she just disappeared. And so basically they stopped and seconds. They haven't actually got
What's the new one?
That's what I said. But it's not just, it's something inside you.
No, listen, it's the whole thing that's inside it. It's this thing is plain. It's plain by the shoelace. It's plain by that other. Why do you think he wasn't even on the TV? Because he's busy running around planning it. Why? Because Malema wants the thing to be a fuck up so that because he knows if it's not a fuck up, he's going to end up in jail too. He's keeping himself and he wants to take power, he wants to take control over this. Why do you think he went to go see Jacob Zuma? That's why he went to Jacob Zuma. It's a piece of shit there.
Hi, sir.
I wish I had tried now. I do. Sees you. Listen. Shit, it's a fan enough. My life, your life, my children's lives are threatened. I'm also concerned about Ryan because he's also, he's one of the captains in London. Ryan.
Yeah, we know that. is it the dog?
Hello? Any questions? Yeah. All right, can we look at this, please?
Yes.
Okay, thank you. Okay, let's try our luck. Your trust creditors at the 30th of June 1995 total 500,000. So if they total 500,000 must mean we must have the money in the trust cash book, right? 500,000. So we've got the 500,000 in our trust banking account, 500,000. An examination of these trust creditors are made up as follows. Mrs. Black has instructed you to invest a sum of 100,000 which you hold in trust. So for Mrs. Black, we hold 100,000 in trust. Okay, I'll put it on the second line, I think. Yeah. And she has instructed us to invest it in an interest-bearing account for her benefit, pending transfer of the property. If it says for her benefit, then it is the 86-4 account, eh? Because we're not doing this of our own accord. We've received an instruction. We invest 100,000 with Phoenix Bank. What would I first do? I'd go to Phoenix Bank, either online or whatever, and open this interest-bearing or savings account with them in the name of my practice, Section 86.4- Mrs. Black. Then get back to the office and do an EFT to Phoenix Bank. Doing the EFT to the bank, have I got a transaction? Yes. Is it trust or business? Is trust? Does money go through the bank account? Yes. So we credit, it goes out, credit the bank account. Then I open in the ledger an investment in terms of 86.4, which is back, and I debit the 100,000 there. When you close the account, you receive an EFT for 101,000. Well, what did we see in the Legal Practitioners Act there? It said that when we close the account, the money has got to go back into the 86.2 account. So when I close it, I receive 101,000. So over here, I have to make the money back in the 101,000. Now that 101 is made up of three elements. Firstly, the 100,000, which is the investment, which is no longer there. Then the 1,000 Rand, 95% of it is interest that's accrued to Mrs. Black. So we credit Mrs. Black with the 950, and then we open up a fidelity fund interest in terms of Section 86.4, and we credit the other 50 Rand there. Then it tells us we paid interest to the beneficiaries. Who are the beneficiaries of the interest? Mrs. Black. So I do an EFT to Mrs. Black, then I write up my cash book. Is there a transaction? Yep. And I'm going to credit here the 950, and then the other 50, I'm going to pay to the Fidelity Fund, the 50 to the Fidelity Fund. And let's post it now. We debit Mrs. Black. We can debit her with the 950, and we still got 100,000, and we debit the Fidelity Fund with the 50. I'm not going too quickly, am I? All right?
A little quickly, can you just slow down just a tad?
Okay,
please?
okay, let me run through it again then. 100,000, when we made the investment, yes. Now when the money comes back in, okay, I've got to, we said, and we saw it's got to be invested back, not invested, it's got to be deposited back into the normal current account. Now that 101, it's made up of 100,000 rands of the investment and 1,000 of interest. But the interest has to be split 95% to Mrs. Black and 5% to the Fidelity Fund. So I deposit the 101. Now I must split post it. 100,000 is the investment, which is no longer there. 95% of the interest, 95% of 1,000 goes to Mrs. Black, and 5% goes to the Fidelity Fund. Now we have to pay the 950. Okay, we pay the 950. Who do we pay it to? Mrs. Black. And the Fidelity Fund, we pay the 50. Your client, Mrs. Green, instructs you to invest her 200,000, which you hold. So we are holding for Mrs. Green, we are holding 200,000 in trust for her. Oh man, we are holding 200,000 in trust for her. She instructs us to invest it in unit trusts. Now, what are unit trusts? Unit trust is like a collective investment. Let's say I can only invest 1,000 or 2,000 rands a month. I want to get into unit trusts, and I want to get into unit trusts. It's like they form a trust where you put in your 1,000 and a whole lot of people put in their 1,000. Then they take that collective money and they invest it in various types of shares. It could be shares in the insurance industry, in the banking industry, financial sector, or in the property sector, whatever it is. But every time I put in my 1,000 a month, at the point in time that the value, there are units, that the value of the units are determined by the price of the shares. So then I would get so many units. Now she instructs us to invest this 200,000 into this unit trust. Does this comply with Section 86? This is her. 4, is it in a separate trust savings or other interest-bearing account? No, it's not. Well, it's not interest because look, it's volatile, isn't it? It can go up and down, and it doesn't necessarily earn interest. It doesn't qualify. The unit trust doesn't qualify. So I've got to say to Mrs. Green, listen, Mrs. Green, I cannot invest it in terms of Section 86(4) for you. I can't do that because it doesn't comply. But she says, listen, I couldn't care two hoots about your Legal Practitioners Acts. I'm telling you, you got 200,000 of mine. I want you to invest in unit trust. How would you do that? You are therefore going to have to invest it in her name. So you would need to get from her a power of attorney to be able to invest it in her name. Okay? You have to do it. You can't say to her, look, I'm not going to do it because let's say those unit trusts the shares spike by 20%. She's going to sue you for 20% of the 200,000 that you should have invested. And you're going to be up a gumpole because you didn't act in terms of a mandate. So, excuse me, you're going to invest it into the unit trusts, the 200,000, but that money comes off her account. In other words, she no longer has trust money with you because the unit trust does not comply with the Section 86 investment. Pardon me. So we get a power of attorney and then we debit her. Now, what is the significance of this? The significance of this is that if I, as the attorney or my staff, manage to somehow steal the 200,000, cash in those unit trusts and take the money, would she have any recourse to the Fidelity Fund? No, because it is not trust money. That's the most important part of it. It is not trust money. So the way that we do it, we just debit Mrs. Green. Then, how much would we have for others now? Because of this 500, 100 was black, 200 was Mrs. Green, so there must be another 200,000. Okay. Now you decide to invest, you decide which complies with this part over here, which says of your own accord. You decide to invest 150. So you invested with Phoenix Bank. So we invested with Phoenix Bank. We opened the 150. Now we open an account here, investment in terms of Section 86(3), and we debit that with a 150. Is that okay? Now, we debited over here the 150. Okay, now when I withdraw this 150, I get 152. Again, what do I have to do with it? I'm going to put it into the trust banking account and record it now in my trust cash book. Now that 150, yeah? Somebody a question? No. Okay, and 152 is made up again of 3 elements, isn't it? Or 2 elements, sorry, 2 elements. It is the 150, which is the investment which has been withdrawn. So I credit the investment. And then I open an account for the Fidelity Fund, interest in terms of Section 86.3, and the other 2,000 I credit here, showing that I now owe the Fidelity Fund the 2,000, and then it says I issue an EFT for the 2,000. Who do I pay it to? The Fidelity Fund, and we debit the Fidelity Fund with the 2,000. What money have I now got left in the bank account? I've got 300,000, which is represented by the 100,000 that I owe Mrs. Black and the 200,000 that I owe others. Does that make sense? Are there any questions on that? Okay, hi Sir Shannon, you're asking why in activity T1 we paid FF fund and we pay as 2 entries 50. I think it's because the question says here, you know, I pay the beneficiaries the interest amount in C. The question that Shannon has asked me here is why over here did I pay the Fidelity Fund in one figure and here I'm paying them in 2 figures. The reason being because I'm just following the question. 2.1 says when you close the account with 100, I paid the beneficiaries. I don't know if I closed 2.1 in C2 at the same time as 2.3 in C2. Maybe they were just different times. So I've just done it like that. I don't know. I hope that it explains it to you, Shannon. You know, over there in question 1, it says you pay the, so I paid them all at the same time. In question 2, there could have been a difference in time between when I paid Mrs. Black the interest and when I paid this 86.3. There could be different weeks. There could be weeks between the two. Is that okay?
Mr. de Kock, just explain to me, where did the 200,000 Rand under the ledger account for others come from? I missed that one.
All right. If we've got 500,000 in the bank account, right? That means if I've got 500,000, that means I must have trust creditors of 500,000 or so. Do you agree with that?
Okay. Oh, sorry. Yes. Okay. Now I understand. You don't have to explain further. Thank you.
There's the 100, the 200, and
yes.
the 200. There you go.
Okay. Thank you, sir.
It was very much the same over here. Remember that 463,418 was the 150. How did I work out the 313? I deducted the 150 off there because they should always, the list of trust creditors must equal to the money that's in the bank.
Yes, no, I missed that for a second. Thank you, sir.
No problem, that's fine. Any other questions that we've got there? Anybody else got a further question for me?
Mr. de Kock, sorry, the 300,000 Rand balance, that's because of the unit trust.
Yes.
Okay, cool.
No, wait a minute, say that again. Say again.
The 300,000 Rand balance?
Yes. Where
is that, where does that come from? Is that because of the unit trust 200K?
Well, look, we don't, for Mrs. Green, we don't have any trust money anymore, isn't it? Because this 200,000, look, there was a power of attorney. I have actually lost, I just wanted, I'm glad that you asked that question, because over here, Section 86.4, it says, for the purpose of investing there on behalf of such person, this investment over which the practice exercises exclusive control as trustee agent. Now, if I go back to this one here, those unit trusts, in whose name are they? They're in the name of Mrs. Green. Have I got exclusive control? No, because Mrs. Green can go down to the unit trust people and say, pay it out. She doesn't need me. Yes. That is why it's no longer trust money. So the only trust money we are still holding is Mrs. Black's 100 and the others 200, which totals up to the 300.
Okay, cool. Yeah. Okay. That's what I thought. Okay, thanks.
Now, if I just want you to have a look quickly, so we're not going to do question C3. I want you to look at C3 at what are you required to do? C3, if you see point number 2 and point number 3, I don't know if you're all there, it says there, you are required to extract a list of trust balances as required by the Law Society rules. Now, let's assume they had asked us in this question now, okay? And what we're doing here is also called the trust reconciliation, and I'm just going to do it for you. The trust reconciliation. That says extract a list. Oh gosh, yeah, that's why, because I've blanked it all out. Oh yeah. Okay, the trust reconciliation. So I'm going to have a list of trust creditors. This, what I'm trying to do here is say, if this had been asked, so that when you come to do this tomorrow, you know exactly what to do. So I'm just doing it with question 2, what they are actually in question 2, just to show you. The list of trust creditors here, who would it be? It's Mrs. Black. Mrs. Black. And what is the amount we owe Mrs. Black? 100,000. We've got others. Is this over here? And it's 200,000. And now we've got to add that plus that. The total is 300,000, and we will then just underline that. And then trust funds held. What is it? The only trust funds that we got is the cash book, which is section 86.2. That we've got the balance there is 300,000. In other words, now this list we've got to extract on a monthly basis, and we've got to keep that list for the period of 7 years. You remember that? We read that earlier on. That list on 5415, if you look at 5415 here, where is 54? Oh, wait a minute, quite further. 5415. A little bit further. Yeah. Every firm shall extract in a clearly legible manner a list showing all the persons on whose account money is held, has been received, and an outstanding to the credit of each such person who shall be identified in by name, and you shall total that list, which is exactly what we did. We extracted the list and we totaled it. Ach, no, man. And we totaled it. And then what does it say? That total, compare that total with the total of the balance standing to the credit of the firm's trust banking account, the trust investment account, and amounts held by it as trust cash. And we did that. We don't have any money, we don't have any investments at this point. So the money in the cash book, so here we have reconciled our trust position. But what does it further go on to say? Each such list shall be part of the accounting records of the firm to be retained for the 7-year period referred to in 54.9. What does 54.9 say? Where is 54.9? Wait, I'm going too fast. Yeah, 54.9. Yeah, retention of accounting records and files. The firm shall retain its accounting records and all the files and documents relating to matters dealt with for at least 7 years from the date of the last entry recorded in each particular book or other document. Where may you keep it? Save with the prior written consent. It must be at no place other than its main office and a branch office, or in the case of electronic accounting records, the location at which such accounting records or files are hosted. In the case of electronic, such records shall always be reasonably secured and shall remain immediately accessible to authorized persons from the office of the firm and to the council. In the case of a branch office, now if you've got a main office and you've got a branch office, you may keep the books of both the main and the branch office at the main office books, okay, at the main office. Let me say that again, it sounded horrible. If I've got a main office and I've got a branch office, I can keep the books of both the main and the branch at the main office. I cannot keep the books of the main office at the branch. At the branch, I can only keep the books that relate to the branch. The main office can keep both sets, but the branch office can only keep its books. So we could have, the main office can have its own set of books, the branch can have its own set of books, but both could be kept at the main office. Now, and where must they be kept? Where the accounting records are required to be made available elsewhere than as provided for in this rule to enable an auditor or inspector to comply with the provision of this rule. The accounting or may be removed temporarily to the premises of the auditor, and as soon as okay, so that's it. Updating accounting records. A firm shall update and balance its accounting records monthly and shall be deemed to comply with this rule if its accounting records have been written up by the last day of the following month. We are now currently on the 13th, I think it is, of July. So your books for May would all have to be reconciled and balanced. And that had to be done by the end of June. June, you'll have to finish by the end of July. So you can see everything over here. Over here, the accounting record shall distinguish in readily discernible form between business account transactions and trust account transactions. So you can see, yesterday I said to you, why are we doing this course? It's so that you can comply with all of this, okay? That you can comply with it. Over here, trust money to be kept separate from other money. Trust money shall in no circumstances be deposited in or credited to a business banking account. Money other than trust money found in a trust banking account at any time shall be transferred to the business banking account without undue delay. What I actually mean here is that, okay, let me read a little bit further. A firm shall be deemed to have complied sufficiently with this rule if it makes a transfer from its trust banking account to the business banking account at least once a month. You see, what they don't want you to do, if you've got money in trust and you've got disbursements or you've charged a client, they want you to transfer that money. Because remember, they are insuring that money in trust. And if it's not really, and once you've charged your fee, you are entitled to take that money. Now, some clients don't take the money. They just leave it lying there. Okay, let us continue tomorrow. Thank you very much. Any questions?
No, thank you.
Right. Okay, thank you. I'll see you tomorrow morning at 8:30. Thanks very much.
Bye.
Bye. Have a nice night.
Okay, bye.
Bye.
Thank you. Goodbye.
Thank you very much. Cheerio. B, are you still there? B van Schoor, are you still there?
Hi, sir.